All right, welcome to Mortgage Monday, where Andrea and I get to sit down and answer a lot of your questions in what's involved in buying a house. And so thanks, Andrea, for joining us today.
Thanks, Jason.
So one of the biggest questions that we get right off the bat is not only is there a lot of money that goes into buying a home, but what is it really going to cost me in nickel and dime fees, et cetera, or what's all involved in buying the home. So today what we're going to do is we're going to break down all those closing costs, give you some rough idea of what's involved, and maybe explain a little bit, and then we'll go from there. And so, Andrea, if you want to start off, go ahead.
Yeah, so like you said, a big thing with buying a house is looking at what kind of other costs are associated with it. Obviously, most people are focusing on what will my mortgage payment be. But aside from the mortgage payment, it is always good for a client to kind of do up a budget to kind of see all those extra costs that are associated so that they know full picture what they'll be spending to purchase their home. So one of the biggest ones with buying a home is your lawyer fee. So the lawyers needed to close on the house, to disperse the payments, get all the legal stuff done up, and those are probably the biggest closing costs that you'll incur. So a lawyer on a purchase is anywhere from $1,500 to $2,000, and yeah, that's where you're gonna have to meet with them, sign all those documents, and get everything finalized before the closing.
Yeah, and so if we look at the legal fees, if you go out and search, you want to see what the lawyers charge. You want to look at their legal fee, and then you want to look at what they charge for disbursements. Generally, what's going to happen is they're all going to average somewhere about the same. Okay, some lawyers may charge a little bit less upfront, but they may charge you more per photocopy, for example, where others say, we've got a basic fee that includes disbursements. So understand that when you're looking at what they're charging, truly understand what the fee is. Some other things that you will have. We don't have land transfer tax in Alberta, but there is a registration fee. Okay, there will be, we'll talk about it a little bit. There's going to be things like title insurance that may be involved, or you may want to have it involved. There's going to be, adjustments. So an example is if the seller had paid their property taxes for the entire year, but you're taking over the home halfway through that payment, then the lawyer is going to ask for that kind of correction. Okay, so they're going to say, look, the seller should have another 50% of the property taxes money back, because what they're doing is they paid for the entire year up front. They're not living in the house for the entire year. So it's another example of disbursements. So when you look at the legal fees, understand that the lawyer typically charges a set fee, and they'll disclose it. Oh, something else, it's going to differ if you have a mortgage, okay, and how much information or what is required with those mortgages as well, how it's going to be registered. So there's a lot of variance that can occur, but I agree with Andrea. I'd budget for 2,000, and there should be some cash left over.
Yeah, no, that is great. Thanks for diving into that a little bit more. I think another closing cost that's more dependent on which lender or bank that you're going with for your mortgage is an appraisal. So lenders like to look at what the value of your home is and make sure that when they're going to lend on that, especially if it's a high insured or high ratio, that's what we call them, they want to make sure that that value is in line with what they're giving for a mortgage. So, more typically they will ask for an actual appraisal, an on-site appraisal, where an appraiser will go out and appraise your home. They'll ask for that more on condos or properties that, aren't necessarily going to be, as, I don't know the word for it, in line with what values are out there or the purchase price. The other way that lenders like to do it is what they call the auto valuation model. So they'll do it online, where they'll put in the property address and it'll go through their automated valuation, and it'll either say yes or no to what the value should be. They do charge usually anywhere from $100 to $200 for the automated one. But if you need an appraisal to go out, if they request an actual appraisal, it can be anywhere from $350 to $500, depending on the type of property and everything involved with that.
Yeah, and that's perfect. And so the automated one, I like to describe it as AI, basically evaluating your property. There's some certain characteristics that have to be there. Okay, number one, there has to be realtors involved. If it is a non-realtor transaction, then the lender wants to make sure it's an arm's length transaction and that you haven't artificially created this number. So for AI to be involved, it has to be realtor to realtor. You also have to have less than 20% down. Okay, once we start to go over 20%, the bank may want to verify that the home is actually as stated. CMHC, Genworth, those people do a lot of the AI stuff where they do an evaluation and say, yes, this makes sense, or no, it doesn't. And but there's less of those AI opportunities if you have 20% down or more. So also be aware that it's more likely that you'll have somebody physically having to go look at the property. Now, a lot of people say, hold it, we've already been pre-approved. Why do we need to go through this additional approval process? It is for that appraisal very reason. So what they're doing is they're basically saying, yes, you're approved, but will the house qualify? And so be aware that it's going to be impossible to get away from some version of an appraisal. Is it going to be AI generated, or is it going to be somebody? Sometimes they just say drive by, prove there's a house, right? Is the house still standing? Or they're going to get the appraiser to go inside and make a bunch of notes and report back.
Yeah.
So that's my 2 cents on an appraisal.
Yeah, no, I think you hit all the points there. It's almost like you're reading my mind, and anything that these borrowers or clients are looking for. Yeah, that definitely covers that. Next to an appraisal, I guess another big one, which you'll probably can touch on a little bit more, is the home inspection. So, we usually have as a condition on your purchase contract, pending your inspection, and if everything goes through with that. So I'll let you kind of take this one away. Inspections are a little bit more in your realm and for costs associated, but I think it's still in that $300 to $500 range. Correct me if I'm wrong.
Yeah, no, that's perfect. So there's always going to be 3 conditions that we recommend, okay? Financing, home inspection, and a condo document review if you're doing a condo. And so the home inspection, they don't do a pass or a fail. They're not telling you that the home qualifies or it doesn't. What their job is to totally tear apart the house, not physically, metaphorically, and create a list of deficiencies in the home. Even brand new homes are going to have deficiencies. So it's really important that you go and you get this great big list that goes on, and then you're able to decide, is this something that I want to proceed with or not? Every home is going to have deficiencies. Now, generally what they're going to do is they're going to charge you a base plus a per square foot, depends on how big the home is. Okay. I think for a condo, it's going to be tough to be able to get an inspector to go for under $300. I think that's where they start. And then residential homes start at about $500. With an inspection, though, there's other inspections. If you're doing rural, for example, you may want a septic inspection. That will add in some more fees. You will have a water inspection. Make sure that it's drinkable and it has an adequate volume. So there's a number of other little inspections that can be done. Generally, what I suggest you do is try and find a home inspector that does all of them, because then they can do them all at once. But it starts at $500 and will go up to, well, we've seen them up to $1,000, depending on what you want done. But once again, remember, it's not a pass or a fail. It's a complete list of deficiencies that you need to prepare for. So it could be, you got 25-year shingles on and they're estimating it's good for another 15 years. It just allows you to budget and forecast. Okay. And so, yeah, that's my take on home inspections.
Yeah. So I guess on a side note, with these inspections, does that leave room for a little bit of negotiation as well when you're buying a home?
Yeah, it can. So one of 3 things can happen. Okay. You can accept the home the way it is. You can reject the home, or you can go back and try and negotiate on price or having a few things done. Just be aware that depending on the market, if it's a strong seller's market, they're not going to budge because there's somebody, just you probably even competed, that is prepared to write an offer and not have an issue with those things. In a strong buyer's market, that gives us the ability then to go in and do greater negotiation. So it is going to depend on what the items are. It's going to depend on the value of the items, and it's going to depend on what's going on in the market. So not every transaction, don't have an expectation that you can use a home inspection to negotiate price. But remember, you have those three options. You can accept it, reject it, or you can say, you know, I need some of this done. And so just be aware with that. But it's fully in the seller's rights to say no. And so I strongly suggest that you don't try and use a home inspection as a negotiating tool after, because most sellers in today's market are just going to say, forget it. So negotiate that price up front with the expectation that, you know, there will be some deficiencies, but they're not major, and then see where it goes from there.
Yeah, absolutely. So I guess bottom line is home inspection needed to help and aid you in your decision to either go ahead with the purchase or being able to walk away at that point with that condition on.
No, exactly.
No, that's awesome. Thank you. I guess the next one I'm going to talk about is property taxes. That's definitely a big one. As you had said, you know, there may be upfront costs with the lawyer when it comes to property taxes if those sellers had, you know, paid for the full year in advance. So, you know, always be aware that there may be another, you know, lump sum cost at closing to do with property taxes. And then, of course, the best way to get around property taxes is to go to the county or the city and set up on what we call TIPS. It's the monthly payment plan with the city. Lenders right now are actually moving away from collecting property taxes on behalf of borrowers. So there are still a bunch of lenders that will collect them, but certain lenders, and you know, we're seeing it more common now, they just don't want to do it anymore. So it's always best to think about setting it up on your own, so that, you know, if down the road a lender pulls away and says, I don't want to do it anymore, at least you have it done and you have it ready to go, and you know what the actual amount is. So
yeah, excellent. Yeah, and so you have the ability to pay annually or monthly, and sometimes the lender will build it into the mortgage payment. So that came from a mindset where the lenders would like to know whether you were delinquent in your property taxes. So they started to say, you know what, we'd rather control it and know that you're paying for your property taxes than get a notice 3 years later saying, oh, by the way, you know, they've registered something on title where it erodes their equity, or it could in a shifting market. But because we are seeing great growth in property appreciation, and it is becoming, you know, it becomes a little bit of a logistical nightmare, an extra thing that lenders do have to do. So they're trying to move away from that as their model allows.
yeah, absolutely. So yeah, property taxes are a big thing. Like you said, lenders want to make sure that those are being paid, but at the same time, lenders always usually take more than what they need every month if they're working it into your mortgage payment. So it is always best to just go ahead and do it on your own, so you're kind of in control of what those amounts are, and you know for sure, you know, what's being paid.
Perfect.
Sorry.
I said perfect.
So aside from property taxes, the next thing that we need to make sure is in place before closing is your property insurance. So you want to make sure that you have that insurance in place on your home. No lender will lend on a home without it in place, because you never know what's going to happen.
No, and that's so true. So you're going to hear insurance over and over and over again. And there's basically 3 different types that you're going to hear about, actually, where it's going to be 4. So the first one is going to be default insurance. If you have less than 20% down, okay, there's going to be CMHC or Genworth or another insurer that is going to say, if the buyer doesn't pay, then the insurer agrees to pay. So that's the insurance word that you're going to hear first. Then you're also going to hear the property insurance. Okay, so property insurance is going to be, if your home were to burn down, is the bank going to get paid? Okay, so they want to make sure that they have a letter from your insurer. It's going to be part of the documents you have to get to your lawyer. Is the letter is going to say, yes, we say Royal Bank gets the proceeds from this insurance to cover the cost of the mortgage. Okay, so they're getting paid first. So that's something that Andrea is going to ask you to do before you take possession. Provide that letter. Okay. The third type of insurance, when you're talking to the insurer about that, you're also probably going to think about content insurance. If the house burns down, the mortgage is paid for, but you have couches and beds and TVs and computers and all kinds of things in the house. Okay, so that's referred to as contents insurance. They are not tied together. Okay, they are two separate entities. And so make sure that you're very clear with what you're asking your insurer as to what's being provided. Okay. We also will hear mortgage insurance. Okay, that's basically life insurance on the mortgage. Andrea and I will probably do a discussion on this because it really varies whether you get life insurance through the mortgage company or if you get life insurance from a life insurance provider. So those are four different types or times that you're going to hear the word insurance. And actually, there'll be a fifth one because we're going to talk about title insurance here in a little bit. But when you hear the word insurance, understand that they are not interchangeable. There's going to be 5 different types of insurance that you're going to be encouraged to buy or you're going to have to do in this process. And feel free to reach out if you have any more questions on any of that.
Yeah, no. Yeah, it could seem a little bit overwhelming having 5 different insurances, but they're definitely needed for, those unforeseen circumstances, anything that's going on. The lenders want to cover themselves. You want to cover yourselves in case something, ever happens. So yeah, I think insurance is a huge play when you're buying a home. The last thing I guess I'm going to talk about before I move it over to you and some extra costs that are associated on your side is the down payment. So as you had kind of seen with the default insurance, how much you put down is a factor. You can buy a home now with minimum 5% down. You will have to pay for that default insurance, as Jason had mentioned. So 5% down on your purchase price, you'll need to factor in that and prove to lenders that you have that in your account. So they do like to see 90-day history of your bank account where those funds are coming from. Or you can get a gift from an immediate family member. But whether you're putting 5% or 20%, just taking that into account, making sure you have those funds sitting for 90 days is definitely something to prepare for when you're coming up to buy a house.
Yeah, and that is so powerful. They really want to know the 90 days to show that you didn't just get that money from a friend or from family and just throw in the account. Yeah, I have the money.
Mm-hmm.
They want to make sure that it's yours, it's in your account, and that there's a proven record of it being there.
Yeah. The only way around that is that gifted. So an immediate family member can gift you down payment, and then we can do a gift letter and show it was transferred and all the rest of that. But outside of that gift letter, yeah, they do want to see 90 days history of all your transactions to make sure that you didn't just randomly acquire $20,000 or whatever it may be. So yeah, it's to keep in line to kind of watch out for fraud or criminal activity, all those types of things with mortgages, which they're really gearing down on right now. So
yeah, and so also think about if you're bringing money in from another country, right? So we've recently had a buyer that was from Mexico, and they were getting an additional $20,000 sent to them from mom and dad in Mexico. Little things like that create hiccups where they do want to see the track record of where that money is coming from.
mm-hmm.
Some countries, they won't even touch it all. And so really important, we're not going to get in the weeds in that right now, but just understand, best bet, have that money in your account 90 days before you write an offer, and there's no issues. Same thing with an RSP. If you're putting money into an RSP, it needs to be in there for 90 days. So when it comes to the down payment, just use 90 days in your account, either your RSP account or your checking savings, your own personal account, and you should be fine.
Yeah, absolutely.
Perfect. And so I do want to touch on condo docs. So condo documentation. So when you're buying a condo doc, or when you're buying a condo, you're basically buying into a corporation. So you want to make sure that all the information that's happening in that corporation is verified. Because you are liable. You share in the liability with everybody else in that condo. So a simple example is if grandma comes by at Christmas time, slips and falls on the ice, breaks a hip, and decides to sue the condo corp for not clearing the snow, then every condo owner is liable. So one of the things we review, or not we review, but that you're going to review is, are there legal fees, any legal actions that are going on in the condo? You want to know what the financial documents look like. Now, also, not only the financial documents, but they do a reserve fund study. So basically, every 5 years, an engineer and an accountant come in, and they do an evaluation. The engineer says, this is what we expect to be done 1 year, 5 years, 10 years down the road. Mr. and Mrs. Accountant, how do the finances look to be able to accommodate this work and the transaction as we go along? So then what they can do is they start making some predictions as to whether there's enough money in the reserve fund, whether there will be some special assessments coming up, whether there's going to be increases in condo fees. There's no guarantee that condo fees won't increase, but by looking at this information and evaluating, it gives us the ability to be able to have a better idea and perspective of what to expect. And so that condo review, I say it takes 1,000 pages and it puts it down to like 12. Okay. Generally, what a condo reviewer does is give you the Coles Notes version of everything that's in that document. That's going to cost you about $500. It takes them about a week to review. And so that's another fee to budget for. Anything you want to add on the condos?
No, I think you covered.
Okay. Just going to scroll down. So when you buy new homes, you're going to hear about GST being charged on brand new homes. What they're actually going to do is they're going to get you to sign away your rebate ability because you don't have a rebate. You're not a company. And so what they will do is allow the builder to be able to claim a rebate for some of the GST. The balance of the GST, or the GST will always be included in the price. And so normally what a builder is going to do is quote you a price including GST, but confirm that when you talk with a builder, because sometimes they'll quote you a price and then say GST is included, and then it kind of surprises you. That GST will be added into the mortgage. Okay, so if they quote you, if you negotiate on a price $365 including GST, then that amount is in your mortgage. Okay, so you don't have to come up with the additional 5%, but do know that when you do buy a new home, you have to sign the rights to that rebate back to the builder as well, because that's built into the pricing. We've talked about adjustment costs. Now, there's a few other things that you need to plan for. Okay, utilities, for example. If you've never had utilities with the different companies, then they're probably going to want deposits. Okay, so you're looking at your electricity. You're looking at your natural gas for heat. You're looking at your cable, internet. The water and sewer typically goes through the municipality. And just looking, so that's the bulk of the utilities. So be aware of that as well, because it's not only, the monthly fee that you're going to have. They may say, you know what, you don't have a long credit history, so, we want a $500 deposit or a $1,000 deposit. So it can really vary. So make sure that you're calling around, getting some quotes up front to understand what they're going to require for the deposit on that. Survey. So in Alberta, there is something called a real property report, which is basically a survey of the land. If the real property report isn't being provided by the seller, or it's negotiated between the seller and the buyer, that there will be no real property report or no current real property report, then what that generally will mean is the buyer should be getting title insurance. Title insurance will cost anywhere between $300 and $500. And what it's going to do is it's going to protect you on many different levels. My suggestion is, even if you get a current real property report, I would pay for the title insurance. If I was the buyer, pay for it separate. And because it's also going to protect you for fraud and many other things that are on title. So if you want a little information on that, I strongly recommend visiting First Canadian Title's website. They have a lot of information and some examples of how it can protect you. Note that the real property report is an item that is negotiable, just like appliances and just like price. If in a strong seller's market like we're in, there are many sellers today saying, you know what, we're not going to do a real property report because by the time we get it, it's $700. What some of them will do is offer to pay for title insurance in lieu of giving you a real property report. Make sure your realtor asks for that and really tries to negotiate on that. But also understand that it's not necessary. Okay, a seller can refuse to sell it if you're asking them to pay the $350 for the title insurance. So negotiating tool, most of the time, the buyers aren't paying for that unless they are given a current real property report as a supplementary insurance. Um, but most of the time, they won't have to pay for that. But be aware that it can pop up every now and then. Yeah, so I think we've gone over all the different types of fees that
Yeah,
we
I
can
guess.
see in the process. Typically, what I'm telling my buyers to do is budget somewhere between 2 and 4%. I know that's a big amount when you're looking, or a big variance, right? If you're looking at a $600,000 house, that's the difference between 12 and 24,000. Um, it's not going to get up to 24,000 when we're up at that $600,000 house. The 4% is more for the lower end properties, and to be aware. But I think if you budgeted 2% in most scenarios, it should cover, yeah, the majority, except for the down payment, obviously, because that down payment has to be at least 5% going up to, yeah,
Yeah,
unlimited.
the standard with us is lenders usually look at 1.5% for closing costs. So those would just be what's, the initial ones, like your lawyer fees and your appraisal or your home inspection, those types of things. And so, like you said, you can do 2 to 4% to account for all those additional costs that may be needed. And another point I wanted to make is just to when you're buying a house, you're not paying realtor fees. It's the seller who accounts for those, unless you're buying and selling a new property, and then you do have to take into account some of those realtor fees. What?
Yeah, so that's something that we can't say is an absolute. Let's suggest it's the norm or what happens in the majority of cases. Okay, but that being said, it is not an absolute. Okay, so some scenarios,
Mm-hmm.
there could be realtor fees that are added. In some scenarios, there could be mortgage lender fees that are added.
Yeah.
Once again, they're rare. We can't speak in absolutes. That's, that would be like price fixing, and we don't do that. We understand every situation has its own model. Every situation has its own opportunity to be able to negotiate realtor fees, etc. And so we're not suggesting there is a standard out there. Just be aware that there's a large percentage of the time that there will be no additional mortgage or realtor fees charged back to you. But make sure you speak to your realtor and your mortgage broker about that. When it's time, we're always approachable. You can reach out to us anytime. And there are ways that we can try and make sure that you are as protected in this process as possible. Once again, it's something that, we should probably get into greater detail. If you got those questions, reach out. We'd love to help you on that. And there was, I think we're all good. So
those moving costs might be added into that if you need to hire some movers to, move your house, those types of things. There's a lot of additional little things here. And I guess the last point I'll make is kind of, a tip of advice is when you are thinking about buying a house, please watch your debts as well. Like they get, what you're going to have to pay for your credit cards, for any car payments, those types of things. They are taken into a debt servicing ratio on our end for lenders. So I guess you need to, be conscious of all those extra payments that you have as well.
Yeah, no, exactly. That's a perfect segue, or not directly on this topic, but it's something that we always want to talk about is, yes, there's going to be moving fees. You're probably going to have new furniture that you want to buy, different things that you want to buy. Please, 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 please do not get additional credit from the moment that you plan to buy a house. You talk about it until after closing. Okay, we've seen deals fall apart because dealerships have told car buyers, this isn't going to affect your mortgage. You're fine. No, the lender pulls credit the day before closing and says, oh, you just bought a $60,000 car. Sorry, you no longer qualify. Same thing with furniture. Okay, we've seen buyers go to businesses, and I'm not going to name them, but big box furniture stores, and they go and they buy all new furniture for their home on credit, right? Don't pay for a year. They may buy all new appliances. Whatever it is, all of these are hits on your credit. And the second that even when they're doing the hit, it may not even need to report that you have that loan. They might even just see that you've done a hit on that credit at big box furniture store. And then they start to inquire, are you sure you haven't got any more credit? Is there any more debt that's there? Okay, please, please, please. I don't know how to emphasize this enough. I've seen too many people that transactions had fallen apart the day before closing because they thought, well, what's an extra $100 a month? Okay, don't do it until after closing. If
Yeah.
you have to do it, talk to your lender first. Okay, and see if those numbers are going to change the ratios at all. But best bet, wait till you have the keys. You're okay to move in.
Yeah,
Then
absolutely.
buy your new car, buy your furniture, do what you need to do.
Yeah. No, I think we've covered most of those important costs and, any points on those.
Beautiful. Well, thanks again to Andrea for coming in and sharing some of her wisdom on mortgages, what to expect with the costs. And yeah, we're here every Monday. Quick little lunch and learn about aspects of the mortgage. So feel free to join in anytime. If you would like information on a mortgage, reach out to Andrea. Her contacts will be in the description below. And reach out to me, whether you're buying, selling, just even considering moving, or thinking about moving to Alberta and want some information. We're here to help. And yeah, would love to have a chat.
Awesome. Thanks, Jason.
Thanks, Andrea.